Hello, 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 dear viewers. Dear viewers, it's Mr. K broadcasting all the way from Wajani Studio. Thank you for tuning in. Thank you for subscribing and thank you for following us. And today we bring you another wonderful analysis for the week that we all the trades and the mistakes we made and how everything went. So this video is all about a review of the past market. All right, the market from I think was from the 8th of March, I think from the 4th, if I'm not mistaken. That would be from the 4th of March to the 8th, which was a Friday, right? So this is a review of the market, and you can go back and watch the video on the analysis that we did previously. So thank you for joining and stay tuned. Always remember, this is going to be a long video. It's just a lot that you can learn from. It's going to be a long video because we'll be talking about a lot of things that happen in the market. So stay tuned and keep watching. Thank you. And over there, I have my brother Mokes once again. Mukete. Mokes, can you hear
Yeah,
me?
bro.
Yeah,
Yeah,
bro.
good evening.
Good evening. How are you?
Oh, good morning. I don't know the time, but good
Yes.
morning or good evening.
Yes, it's afternoon here. It's 1:25
Yeah,
here. Thank you for
yeah, good
joining.
afternoon.
Thank you for joining. Thank you for joining. I hope
Okay.
you are doing okay.
Yeah, oh, bless God, bro.
Yes, we bless God. So not let's dive into our chatting for today, okay? Yeah.
Okay.
So let's start with USD CFH, okay?
Yeah.
Just some things that I would like to show you on USD CFH, and one of the things I actually want to show you is the lines. Remember our lines? And books, certain things for our live video will keep them for the elite program, all right? Those who are willing to, those who really want to trade, all right? So certain things we have to just keep them out, okay?
Yes, bro, I'm
Yes,
getting
certain
you.
things will skip them out. We'll leave them for the elite, those who actually want to grow with us and join our elite trading program. So, without further ado, if I come here on 4 hours, Mokes, what I was talking to you earlier, all right, this is a line chart, all right? Now, when you watch this line chart, let me turn it to candles so that you actually see what I'm talking about. When you watch this line chart, right, you see
Yeah.
that the market actually came and break through. Once it break through, you see that it reversed and started going upward. Okay?
Yes, I'm getting.
Now watch one day. But for one day, you see what happened?
Yes.
You see what happened?
Yes.
One day, the candle hasn't finished yet. So if you were taking this trade from 4 hours, that it was going to be a sell, it would have probably been a loss. Because per principle, it states that once the market crosses and finishes out of it, we should be looking for, in this case, sell,
Sell.
right?
Yeah, we should be looking for sell immediately it crosses that line.
Yes. Let me go down to 1 hour and you see something. For one
Okay.
hour, see how many candles actually form and stayed out of it.
Hmm.
Then go down to 30 minutes. You see how 30 minutes worked out of that line?
Mm-hmm.
That is to tell you that we need to revise that strategy because it's not effective for lower time frames.
Yes.
Does it make sense?
Yes.
It
Yes,
doesn't.
I'm following.
Yes, it's not effective for lower time frames because if you're following lower time frames, you get the wrong information. But if you're following the upper time frame, you get the right information. Assuming that this candle finished and was out of here, that would have been a shorty that this market was going to continue falling. But you see what the candle did. It actually came out and it had the buyers push it back into this zone. Like a better vision shows you this.
Hello, bro.
The Yeah, can you hear me? Molks, you can hear me. So, what is the observation here? The observation here, it tells you that this support has not been broken yet. This support has not been broken yet. And that's why I tell a lot of people, those trading the lower time frames, you are at a great risk when you trade 4 hours and below. Mox, I know your internet might not be so stable.
Yeah, I'm getting you.
Yes. But now, see
Yeah.
what I was saying. If you see that for the upper time frame, which is 1 hour, this support has not been broken. You follow? But if you
Yes.
look the lower time frame, 4 hours, it has been broken already. You see, it actually broke. It was broken here. The original line was up here. It break here, just as you see on the candle here. Then if you follow, if we go back to 1 hour, you see how 1 hour actually braked, came out, did a small support here and started going upward, right? More so with 30 minutes. See how 30 minutes work. So this is a clear indication that if you are following the principle, you cannot apply this to the lower time frames. You are at risk to blow your account if you follow this. So you should take that as a note. And for 1 day, it has not been broken yet. That's why we say 1 day is always very stable. When you are trading the daily and the weekly, it is very stable. Another reason why you should trade the daily and the weekly candle. Let's look at the effect of news in the market. Let's look at the effect of the news in the market. This is 4 hours, right? You see the effect of news right here?
Yes.
This is the news that happened yesterday. If you were trading 4 hours and you were in this trade, if you were not very careful, you will likely lose your money. Right? You will likely lose your money. Then look at 1 hour. You see, look at 1 hour. You see how 1 hour, the news affected 1 hour?
That's about 60 pips, sir.
I'm
60
telling you,
pips or
that's
more.
a lot of change in the market right there. That's a lot of, about 60 pips change in the market. Then, 30 minutes. See how big the change is. Another reason why you should not stick if there's a possibility. I'm not saying it's not possible to trade these lower time frames. It's very possible, but you should know what you're doing. You should know what you're doing. Maybe you should assume that when it's about to get to the news time, maybe you want to stay off your trade. Maybe you want to take profits and get out of the market and wait for the market to finish doing what it's doing before you re-enter. Or maybe you know how the news is going to affect the market, then you stay in. That depends on you. But if you look at the 1 hour, the daily time frame, the news has no effect. It has no effect. That's why I say this is very, very stable. Secondly, for those of you who want to be able to draw support and resistance, some of these things are for the elite program, but I'll introduce them to you. For some of you who are really struggling to draw support and resistance, sometimes the candle line, the candle sticks might be a difficult point for you. Try to switch to line, because the line, when you switch to the line, you are able to see the different zones. And the most important zones in the market is resistance becoming support. So when you draw your lines, you want to see resistance maybe to the left side becoming support, maybe on the right side. Those are the things that you want to see. My brother, you follow, right? Yes. So if you want to draw perfect lines, perfect resistance and support lines, you see this is a perfect zone, because here you see that there is support here, there is support here, there is support here. If you move this way, there is resistance here, support, and if you keep going, If you keep on moving, you see, though it didn't actually reach the point, but there's still support there. Then look at this resistance, resistance. So this is a major level in the market. This is a major level in the market, which means that, what am I saying? I'm saying that if the market reverses here and starts to go upward, I'm looking that the market might reach this point. Either it breaks through or it reverses. Okay, so if I take my observation and see that the market is going to go upward, I know that the next level that I should be looking to get out of the trade or make adjustments would be this level in the market, which is a very strong level. A lot of things that I see people do, I get into your charts, then I see a lot of lines. You draw a lot of lines. Drawing a lot of lines is a problem. It's problematic because it means that you have not discovered or searched the right levels in that specific market. So when you draw a line chart like this, it actually shows you where the touches are so that you can perfectly draw the lines where maybe candlestick patterns or candlesticks will not be able to show you perfectly. All right, will not be able to show you perfectly. So by my explanation, I'm expecting that if the market start this week with maybe above here with a bullish uh, 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 candle or a bullish engulfing candle, I'm expecting that if the market is going to go upward, I'm looking at a change to take place somewhere around here, which means I might take my profit here. If I enter here, I might decide to take profits over here, right? So that is just for that basic explanation. I hope that was informative. Okay.
Okay, let me give you a small what I've seen in this market. We should not just normally the market is in an uptrend.
Yes.
Now, a lot of things are telling us that when you see there's one line here, there's a straight line there that you have drawn where the candle the Friday candle closes. There's a straight line you've drawn on that level.